Welcome to TheoTRADE. This is Don Kaufman. July 10th, 2024. 7 minutes to go to the cash close here on this Wednesday afternoon with an absolute runaway rally. And this is before earnings, before, of course, tomorrow's CPI. Let me actually break down the trade as we come into the cash close, because the S&P futures, which are up 54 handles right now, that is not what's on my mind. What's on my mind, if you take a look at the SPX, well, the SPX, it's coming home, people. This is why we look at expected move. Literally, the marketplace is being drawn into the upper edge of expected move, something we cover each and every weekend update here at TheoTRADE. Literally, as we come into the cash close, just seconds to go, we're going to hit it. We're going to hit literally right on the upper edge of that expected move. And by the way, let's go ahead and actually define that particular level. You're looking right in the neighborhood of 56.33, 56.33, and that's it, people. We just tagged it. We're home. So as the marketplace explodes a little bit higher, again, the volatility is kind of coming to life, okay, with upside volatility. And that people should just blow your mind. I mean, literally should blow your mind. Take a look at the VIX today, right? The VIX, and again, it's not accelerating that quickly over here, but you are in fact seeing volatility increase with the marketplace rallying, and rightfully so. I guess the next question and the next logical step, of course, where's the rally coming from? Look, we don't have to explain that in too much depth. It's the usual suspects. Clearly, it's not the financials. It's not so much even energy. Although energy, okay, it came back to life here in just the last couple of moments. It's the usual suspects. Again, it's Microsoft continuing to actually kind of apply itself and get ready to break into new high territory over here. Apple continues to actually break a little bit higher. Of course, you got Amazon, which is, again, this one looks poised to me, and I've got positions on Amazon right now, poised to actually break into new highs. Obviously, Google, new highs right now. Meta, again, looks a lot like Amazon and Microsoft did. Tesla just continues to rip. I mean, probably the most shocking thing about Tesla here on a year-to-date percentage basis, it's now up 6% year-to-date basis. I just brought this up the other day on the weekend update. It's a stock that was actually down almost 45% at one point. And that point wasn't that long ago. I mean, we're looking back here into what? Mid-April, the rip, the rally. It's all effectively in just the last, 3 trading weeks. And I caught a large portion of that rally, specifically with the catapult trade. Nevertheless, last but definitely not least on that front happens to be NVIDIA. And I think the shocking aspect of NVIDIA is that NVIDIA has not actually broken into any new territory. Nevertheless, up 180%. As I said a moment ago, it's tech. It's all tech. It's all the time. Ironically enough, today, you're even seeing some play to the upside in the Dow, which has been nowhere this year, okay? I mean, in terms of a year-to-date basis, I'll actually bring up the physical Dow here, which is up about 1%. But a year-to-date basis, the Dow right now eking out gains up just about 5%. But as I was saying, this rip and rally, and again, let's not read too deeply into anything yet. Is it an astounding rally? Sure, okay, of course. But at the exact same time that you're going to tell me it was an unfounded rally, look, the marketplace is literally adhering, and it stopped directly, okay, on that expected move. I mean, spot on, people. So even though it's pretty magnificent, and I call it kind of a runaway rally, at the exact same time, I'm going to back off from that statement and tell you, then again, the marketplace is doing exactly what it was anticipating to do. The options marketplace is driving everything, okay, these days. But before I go any further, I want to jump directly over to the SPX, because this is where, I'm mentioning it's a runaway rally, and it's before earnings kick off. And of course, earnings this week are not too critical from the likes of like JP Morgan. There's going to be some trade ideas in there, and Citi and a few others. Okay. But the CPI print that's going to come out tomorrow morning, remember, Thursday morning, CPI, when is it? 5:30 Pacific time, 8:30 Eastern time. And the reason that I'm bringing that up right now is take a look specifically at the implied volatility, okay, for that. Here's where there's going to be a little bit of concern. Here's where I've got some degrees of discontent. Volatility is picked up. You're looking at an expected move for tomorrow of plus or minus roughly $38. Now, that's not necessarily set in stone as we come into the cash close over here, but it looks like we're going to have almost another $40 of movement tomorrow. And again, that to me is what's going to draw quite a bit of concern. So you've got a situation right now where volatility, okay, inside of the S&Ps is picking up, okay, while we're seeing a rally. Unusual to some degree. I mean, look, I'm not going to start screaming to you guys, oh, it's fever pitch and this is it. It's the blow off rally. Look, you just got to understand in context that tomorrow morning you're getting a binary event. CPI is coming out. Even if I knew what the CPI print is right now, I still probably couldn't tell you what the price action is going to be, other than to say we're going to move about $40. Okay. And I'm going to tell you right now, I would probably take the over. Okay. In conjunction with a relatively high expected move tomorrow. Okay. And again, the shocking part is you moved $60 today and they kept that expected move packed into almost $40 for tomorrow. That's some big boy stuff. But then the really disconcerting area is there is action in VVIX. A lot of people don't necessarily look at this, the volatility index. There's hedging activity going on. Okay, so not only did the VIX jump, the VVIX jumped. Short-term volatility ripped by the tune of about 8%. Now I'm paying attention. Skew, okay, incredibly high. For those of you that don't speak geek, 151 skew is getting it done. And I'm going to tell you right now, there's the closing bell. I'm going to tell you right now, I think skew is actually going to go higher. There's a whole lot of risk packed specifically into tomorrow's trading session. That is all that I really want to elaborate upon, this evening. So obviously, again, CPI comes out, but that's this kind of binary event. And then we're going to start to move into earnings. Okay, earnings. And I said, earnings, we're going to hear from the likes of like JP Morgan. But frankly speaking, okay, JP Morgan has, although it's rallied substantially, okay, it hasn't been, if you will, one of the driving factors, especially this week. Take a look at auto expected moves. Not exactly like ripping on the week. It's definitely had some upward momentum right now, but this is going to have earnings on Friday morning. You're looking at about a $6 expected move. By the way, if you guys are interested in learning about and or taking some earnings trades, I'm actually going to do an entire mini class specifically tomorrow, Crush Events. It's going to be your guide to earnings related volatility crush. Again, I'll be on for about 2 hours specifically talking about crush events. And I'll tell you what, one of the areas that we're going to cover is going to be JP Morgan and this $6 expected move. I'll even give you guys a couple of trade ideas during that, and that is for everybody. Everybody can attend. If you're going to trade earnings, learn to do it the most effective way. So the deepest concern for me is, I mean, look, we're halfway through the trading week. We're already home, and it's shocking to see. And I often talk about how efficient things are, okay? And it's just shocking to see we literally closed on that upper edge of an expected move. What I'm concerned about is what comes next. That CPI print, okay, close your eyes, it's going to be wild. I mean, it's going to be wild. And as I said to you guys a moment ago, I know it's a $38 expected move. Can't believe I'm going to say this, but I'm actually going to take the over on that. It's a big move. Following what we just saw is a significant move. And again, the area for concern is you've actually got a situation right now where volatility is increasing with the marketplace going higher. Now, one last kind of caveat that I want to bring to everybody's attention in the marketplace as a whole. I think everybody here is familiar with spiders. Spiders being one of the most prolific products, okay, ever built, right? So it did about 33 million shares today. And if you don't speak trader geek, okay, what does that mean? It doesn't mean anything to you. What I want you to see though in spiders, okay, is overall volume. It has just, it's dissipated. It's gone. It's brutal out there. S&P futures, okay, and S&P futures, they drive order flow to the marketplace. Their volume, okay, minuscule. Absolutely. I mean, look, the volume inside of the S&P futures, you're lucky right now, lucky to see the S&P futures trade 1 million contracts, and that's a rather light day. Then we turn over to aspects like tech. And when I tell you that tech is driving things, 233 million shares of NVIDIA traded today. Oh, it gets much better. Take a look at the option volume here. Almost 4 million option contracts traded. Taking a look at Tesla. Now, Tesla is literally double the size of NVIDIA. I don't mean in a market cap. I mean the actual shares. Okay, Tesla's good for 120, okay, almost 7 million shares. These are astounding numbers. Okay, the notional value that traded through Tesla and NVIDIA, okay, are almost equivalent. Tesla did, okay, about 2.4 million contracts. Do you realize just Tesla and NVIDIA, you're almost at 15% of the entire option volume that traded yesterday. Yesterday we did, okay, just over 40 million option contracts. Add a little spiders in there, okay? The spiders, which I said, they only traded 33 million shares. Again, it's $520 product. Yes, it did almost 7 million option contracts, but when you start looking at a product, individual products like NVIDIA and Tesla, and they're starting to drive, okay, notional value to anywhere near the scale of the spiders, you got yourself some big problems. Some big problems. I mean, even stuff like Microsoft over here pales in comparison. Lucky to do 17 million. Apple was rocking today, up almost 2%. Oh, but still my heart, 61 million. I mean, look, that's getting it done, but it's nowhere near what we're seeing out of NVIDIA and Tesla. Okay, trading firms, people, everybody, they're putting everything they have into NVIDIA and Tesla right now. If there's a sign, okay, of that fever pitch, it's the sheer magnitude of trade that has actually moved away from the index products and into literally 2 equity products. Thanks everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.